Okay, guys, good evening and welcome to tonight's session. And as usual, like we've always done, this session is definitely going to cover um, teachings in the market business model. Okay, so so far we've been able to do a lot of things. Okay, we've been able to do a lot of things, and we've been able to cover a lot of things. You get, and this will be the 20th video lecture that I'll be dropping on the market business model. And the reason why it is 20 videos is not because of I want it to be 20 videos or no. This is because that is what is required. I need you guys to understand what I'm teaching you. It's beyond the action. Okay, there must be results for the action. Okay. It's beyond me just saying, okay, um, I'm teaching you. No, there must be a result after teaching. The joy of the teacher is that the student understands after. That's why for those of us who went to school, you when your when your teacher finished teaching, or your lecturer when he's done teaching, he will say, do you understand any question? Because the goal of the teacher is to provide you with information, then explain that information in such a way that there is an understanding imbibed in you, so that by the time a question is thrown to you based on that body of information that has been explained to you that you understand, you can easily explain it, can easily narrate it based on your understanding. So it's important that we traders, beyond just coming and watching videos and writing notes, we understand these things. It is in the presence of understanding that ignorance is, is cancelled. That's when somebody cannot just tell you A, and then you know that it is not. It is somebody will tell you, oh, it is like this, and you know it is not like that. You won't just taking everything that is dropped to you hook, line, and sinker. You have the capacity to filter through some of them. So my goal beyond the teaching is to help you understand what I'm teaching you. For some of you, whatever you've been learning here, you're learning them for the first time. For some of you, it's not as if you're even learning it for the first time. You knew about them, just that it's not been explicitly exposed like I am doing it in these sessions, in these classes. There are a lot of things. So it's not going to be profitable that after spending hours hours in front of the screen watching these videos, jotting things down, spending a lot of time, at the end of the day you have nothing to show for it because of you do not understand them. Based on your thinking capacity as a student, sometimes it will require that you rewatch these videos. Yeah, some of you, it will require that you watch it once, twice, thrice, for as long as you understand them. Your goal is not just to watch, your goal is to understand. If everything that have been covered in these 20 videos can be done via just one video, I would have done it. If it can be done, through maybe a tweet or a post, I definitely would have done it. I wouldn't go through all this stress. But I want you to understand them. So don't waste your time. Make your time in class. Whenever you come to class, make your time count. Every single time you listen to my voice, you listen to how I'm teaching, the things I'm showing to you, make sure they count. Because at the end of the day, these are the things that you're going to use to make money from the market. This is how me I make my money. You need to make your money too. Okay. So I just feel like I should drop that for those of you who would need it. Okay. And let's get down to business. You see, in last class, I was able to show us what happens in a candle, and I told us I used two candles as reference. I told us how a singular candle moves and what happens inside the candle. I told us how askers would create liquidity for bidders to buy into, which would result to the weak low for that candle. And then I now say for a second candle, all information we have about this candle now is open, high, low, and close that we know would be formed. But then we now have extra information about previous candle. Okay. So in tonight's class, in today's class, I will be digging deeper into understanding price movement. Now we are now in this in the session where we are now trying to understand what price does, what price will do. Now, I will still go to time because time is important for price delivery. But for now, let's focus on price itself based on time frame. I'll still go to time based on session. I'll still go to time based on what's it called now? Based on the mode of operations and all those things. For now, let's just focus on, let's take it step by step, okay? Now, you see, the reason why I'm also using a trading view chart to teach is because of I want you guys to get familiar with it. It's a deliberate action because we're going to be needing it a lot when we get to that stage, okay? Now, let's proceed. Whew. So I'm just going to delete this because I don't need them. Now, let's build understanding. Let's build understanding. Very important. Let's build understanding. Okay. So let's start from somewhere. Let's start from somewhere. Um, you see, this from here to here is a time frame. Let's assume this is a 1 hour time. So from here to here is 1 hour. 1 hour. Okay. Now, based on my explanation that I gave to you, I said this candle would definitely have an open, and then askers would start creating liquidity, and then bidders will come in to fill that liquidity, and then once they have exhausted that liquidity, askers comes into control again, creating liquidity, and price finally close. Now this is like an example of what happens in a candlestick. So what I've just shown you here is price is sorry, it's not like this. It's like this. Is from here, right? This is the open to the close, and then where's the wick? From this high, that is the wick high to the wick low. Okay, so basically, this is what you would see on your candlestick chart. This is what you see, but this is the proper explanation. Okay, this is what happened. If you go to the line chart, this is practically what you're going to see. Okay, so what this candlestick represent, everything I've explained here is what happens in this candlestick. So I'm going to move I'm going to move it to this side. I'm just going to move it to this side so that we can and you know can make use of the next. Now, After this candlestick is formed, hmm, a second candlestick would form. And you see, this second candlestick is the is the you see, this first candlestick is the information candlestick. It's the one that tells us, that gives us information that we can use to ascertain what will happen here. Now, this candlestick has a high and a low. Now, by the time this candlestick, which is still the same thing, yeah. So by the time this next 1 hour candle is opening, it's definitely going to open at this close here, right? Now, where it will go, we don't know, and this is why trading is interesting. I see. This is why if there is somebody telling you, oh, price will come to support and start reversing or come to resistance, I said it's a lie. Yes, it's a big lie. It doesn't. That's not what you see. In fact, I'm not going to speak in that context. Let me speak in context of psychology, and this is why I am against those who present psychology as a big deal. Reason is because psychology is not a stand-alone entity on its own. There are things that supplement the effectiveness of how psychology affects you as a trader. So there are pains you would go through. There are losses you will take as a trader, and you keep on blaming psychology. Meanwhile, it is not the fault of psychology. Example, when price comes, let's say, to a resistance level, for those of you who trade support and resistance, and it keeps on breaking that resistance and invalidating your entry, you say, it's my psychology, it's my psychology. But what if you now land MBM and then you now realize that this thing does not work? This resistance stuff is just is a gimmick. And then you now learn about something that truly works. And then you now begin to see evidence and growth in your trading life. Now, the question I want to ask you is that when you were thinking your problem is psychology, did you eventually fix that psychology problem? No. But by the time you learned MBM, did you have that psychology problem again? No. So stop blaming psychology for your inefficiencies. It's not psychology. You don't know. If you don't know, you don't know. End of story. So go and learn how it's done. Psychology just makes up lesser than 5% of what you need as a trader. Okay? So reason why I had to digress into that psychology talk is because of what I'm going to teach you next. What I'm going to say next. You see, when a new candle opens, we don't know if it will go up or if it will come down. But there are things we know already, and there are things we don't know. Now, you see, the things we know is that first, for this candle to go up, we are expecting. Now, there is difference between expectancy and was it compulsory. What you expect might not happen because your expectancy is not a compulsory whatever in this market. It's not compulsory that it happens. It is an expectancy. We want to know where price would go. We want to predict, will it go up or will it come down? That's what we want to know. So everything we are deriving from here is based on expectation. So the first thing we know is that this candle will open at this previous candle close. That one, we check it, done. The second thing is that for us to look for a bullish move, based on what I taught you in our previous class, there must be what? A sell. So a sell, there must be price. It's not even a sell. The point is price must come below the daily open or this new candle open. So you see this candle that open here, this new candle open, once price is below it, it could be below it at any price, we consider it that it is now cheap. expectancy number 2. For price to be bullish, it must be below the daily open. Okay? Now, price can then deliver. But it is not as but it doesn't just stop there. And this is where the next thing I'm going to say is very important. You see, we know what we expect to see. And our expectation is that for a bullish move, price should come below the open so that we can look for buying opportunities. And for a bearish move, price should go above the open so that we can look for what? Bearish opportunities. But it's not just that, because sometimes price would come low, yeah, and keep on going low. It won't reverse for the whole of that time frame will close. Sometimes price will come low, go back to that open, and then it might not reverse. That's why I said they are your expectations. It's not, you are not the one controlling the market. So we have two expectations from the open. That price goes high to give us a sell narrative, or it comes low to give us a buy narrative. And why is that? Because when price is high above the open, once price is above the open, it is considered expensive, and once price is below the open, it is considered cheap or at a discount. If I tell you that something is at, if the normal price for those of you who trade prop firms, you know all these prop firms now, their normal price for their accounts could be $100. Then one of these days, they will now tell you there is a discount going on. Instead of $100, pay $50. Now, that means price is cheaper than the normal price. That's a discount. Or maybe you wake up one morning and $100 is now $150. That means price is expensive. You get what I'm saying? So from the opening of the day, that's the point of negotiation. And that is where anything above it, you look for sell. Anything below it, you look for buy. But there are still conditions. It's not as easy as that. It's easier said than done. So let's proceed. Now that we have our expectations set, the next thing we need to know is that what do we have as information? Now, the first thing we have as information is this. You see this previous candle high? This previous time frame high? And the previous time frame low here. So you see the low here and the high. Now, this is the thing. I'm going to tell you this. Please write it boldly. See, on your notes, write this thing boldly, because it will help guide you directional wise. For any candle, price can only do two things. For any candle. So if this candle is yet to form, so for every candle that is yet to form, price can only do two things. Either clear previous candle high or clear previous candle low. Now, in some scenario, it might not do either of them, okay? But it's very rare, okay? So let's put it into three. Price can do three things: clear previous candle high or previous candle low, or play inside. But our attention is not the play inside. When we get to that portion, we'll talk about it. But please write this down. For every candle that is forming a yet to be closed candle, as long as this candle is not closed, even if it remains 0.00001 seconds for it to close, as long as this candle is not closed, price has the potential to clear previous candle high or previous candle low. So from immediately a candle open, you understand that what will it do? It can go and clear this high or come and clear this low. Those are the two things that would happen. Now, our goal as MBM traders is to know what is going to be. Now, the interesting thing is that we can tell if it's going to clear previous candle high or previous candle low, but we are not at that lecture yet. When we get to that portion, we'll talk about it. For now, let's follow up as I'm teaching you. Now, remember that I told you that from the opening price, once price is above the opening price, it's expensive enough to start selling. And if it's below the opening price, it's cheap enough to start buying. But it's not as easy as that. Because the point is, okay, let's now imagine price is above the opening price. And then it came down a little bit. Does that mean you should start selling? No. Why? Because you might say, oh, Chartered Mark say price is above the opening price. Now it is above the opening price. I will start selling. And then by the time you sell here, price continue going. And then you'll be like, okay, I think it has cleared this high. You know, your logical reasoning, and then you think it's going to sell. And funny enough, it might sell a little bit and then take you out again. No. So because price is above the opening price does not mean you should start looking for sell. Even though that is an active condition, it is just a confluence. We mark it check. And price above or below previous day high, or price above or below the present day open does not, it has just 20%, what's it called now? A 20% probability of it happening, that price will just go above present day open and start selling, or present day low start buying, or below the present day open and start buying rather. Probably is very low. So with MBM traders, we only use that to view delivery. Don't worry, I'll teach you. So when price is above the daily open, of course it can, and funny enough, price can just go up a little bit and start selling for the day. You get? That's why I said MBM traders, we don't try to say we predict. We are fluid, we are flexible. Is there a way you can tell that, okay, that's what will happen? Yes, there are ways. That's why we don't trade pattern. Okay, imagine you are trading pattern and your pattern say once price is above the daily open, you start selling. And the price goes, close a candle, you sell, close another candle, you sell. Before you know, you have blown all your account. So please pay attention to what I'm teaching you. Now, the informations we have is that, first of all, previous candle high, previous candle low. And then we also have the fact that this candle must have a close, which we don't know, a high, which we don't know, and a low, which we don't know. But we can, now this is where technical analysis is very sweet. We can create what's the word for it now? We can create conditions. Yes. We can create conditions that validate our actions. So for a buy scenario, we create a condition that validates buying, and for a sell scenario, we create conditions that validate selling. So we don't just buy just because price is above the is below the open, or we sell because price is above the open. No, because we'll lose a lot. So what do we need to pay attention to? This, the first thing is previous day high. You see, once price moves and goes to a previous day high region, previous candle high. I referenced the daily candle in my trading. That's why I'm repeating previous day high. But we'll also get why previous day level is also very important, because the daily candle is different from normal intraday candles. And there are ways we read them as MBM traders. Okay, so don't think because I'm saying candle now, I'm just starting from the lowest point and we'll drive it up to, then we'll drive to combinations of candle. We'll go to daily candle, we'll go to weekly, we'll go to monthly, we'll go to quarterly, we'll go to yearly. We'll build it up like that. I hope you get what I'm saying. So because price is above the open here, you now go and sell. By the time you take better stop loss, you will know what's wrong with you. Your head will be correct. So don't just say, oh, because no. The condition that validates that the bidders are exhausted. Because you see, for price to start selling, for the For the liquidity to be enough for the askers to start selling into them, the bidders must have exhausted their their buying into this. Now, please pay attention. Let me show you what's happening. You see this sell here, this whole move here, this askers move here. The bidders bought into them. They bought everything. And by the time it get to this candle high, there was nothing to buy again. And it got exhausted. By the time it gets exhausted, what happens? The askers came into control and price started selling. And when price starts selling, what do you think will happen? It's going to fill all the liquidity that have been, played by the bidders at this region. And they'll keep on going like that. Okay? So this year is a condition for selling. Now we can sell. Once price clear previous candle high, now we can sell. For example, you see this candle high here. Once price clears it, this of course this candle, this thing I draw here represent this level here. So once price clears this high, what happened? We start looking for. Now, do we just sell? Of course not. There are things that this is where the market business model entry, the MBM entry model comes into play, which will be the last thing I'll be talking about. Because you don't just say, oh, it has cleared previous day high, and then you start selling. You will learn lesson. Because it can clear previous day high. Remember, the reason why it starts selling is because the buyers, the bidders are exhausted. So what if they are not exhausted at this price? What if they keep on buying and buying and buying and buying and buying? Or what if for the whole of this day, they never get, for the whole of this time frame, they were not even exhausted? How can you tell? That's why I will show us models that help us know when there is exhaustion in price. But the first thing is, once price clears previous candle high, just automatically expect that price is now considered very expensive and bidders can come into control to start selling. Now, it might not be a long-term sale, it might just be a short-term sale or a mid-term sale or whatever. The point is that at that point, price sold. Price sold. It might continue going up, but at that point, price sold. There was exhaustion. And that little move there is enough for some people to take profits, especially scalpers. Now, for a sell scenario, opposite of what happened in the buy scenario. First, it will be opposite of what happened in the buy scenario. Price, price goes below the present day open, clear previous day low, signaling exhaustion, then the bidders buy into the scarce move. Now, if these conditions are met twice in a day, even if it's 1 million times in a day, that is what we will always do. So if, let's say, for example, price went up first, clear previous day high, and then sold, then came to previous day low, you must look for buy. And then come back to previous day high. In that same candle, you will always look for buy too. Okay, but there are conditions that also come with that, which I will teach us. But that is basically how candlestick. So let me rephrase. The first thing we have is the daily open. And then we know that for us to buy, price must be cheap. For us to sell, price must be expensive. That is it. So conditions for price being cheap, let's imagine for a buy scenario, is the first condition is that price must go below the daily open. Once that is set, we don't buy. Why? Because that is not its price is not considered cheap enough. That is not an appropriate price for us to enter. We're looking for cheap price to enter. For some people, price is cheap for them enough, but for us not. So we wait for price to clear previous day low, and then we can now start looking for entry models that we can now use to buy. And in a sell scenario, see price open, goes above the daily open and above the open, clears the previous candle high, then start selling. Okay. Now this is basically why you will see a, let's say for example, now look at this candle now. Now this let me now explain why traders, you people are funny. Yeah, can you imagine that someone will now say a candle pattern or candle what do they call that thing? Candle pattern or candle color, because it's bullish, the next one must be bullish. No, guys, let me tell you, this gives more reason to why candle color does not matter. Now, this is a bullish candle. How do you know it's a bullish candle? Did I color it bullish? No. But how did you know? Because it opened here, closed here. Now, this candle here, when it opened and it cleared previous day level. Now, please pay attention. When it cleared previous candle level, when it cleared previous candle level, yeah, and it started buying. Now, it's two things would happen. Is either it close. Sorry, let me use a more versatile one. Now, when it opens and it clear previous candle low, two things will happen. Is either it now close below the open, which means this is a bearish candle. That means price opened here and closed here. Now, this is a bearish candle. Now, they will now tell you, oh, bearers, how did they used to say that? They will tell you, bears are in control. Which bear is in control? Nobody controls any candle. Your candle just shows you information. It doesn't tell you who's in control or whatever. Control is with volume, not with candle's color. Because candle clear previous day low now, and once it clear previous day low, what happened? It went up and then closed here. But you have made your profit here. Funny thing is that it can even go up and close bullish for the day. It might close bullish for the day. And you will still make your profit. So those people telling you and candlestick color, whatever, it doesn't matter, bro. It doesn't matter. The one is, as an MBM trader, please, let me say this again. Don't try to think you know. Something that has not happened is still void to your knowledge. Use what you have. So as MBM traders, we don't try to say, I think it will come down or I think it will go up. We don't do that. What we do is, every information we have, we analyze them. For this candle now, one thing is we have previous day high, previous day low. And then price now starts selling. And now it now clear previous day low. That is the information we have. And that information is telling us what? To buy. And we buy. That's it. If it did not buy, that is a loss. But that's what we follow. Yes, there are some conditions that it will not buy. Even after clearing previous candle low. Yeah, there are some conditions that it will not. And I will show us those things. I will show you everything. So that by the time price start telling you that, okay, when price comes before the previous day low, you just know that, oh, it's a hoax. It's not going to hold. And then you don't blow your account or you don't take loss. The only reason why you take loss as an MBM trader is that you lack context. You did not read properly into price context. You didn't see what price is trying to tell you. Now, if we are going to draw this candle now, we'll draw it like this. We'll draw it as it's opened here, and then it closed here. Where's the high? This is the high of that candle. No. It's opened here, it closed here, and yeah, the opening of the day was the high. So we don't even have a wick for that candle. Then this is the wick low. This is the wick low here. And if we look at it, see this wick here. See how it is lower than this candle. This candle wick here. In fact, let me draw them together so that you guys don't get confused. Let me drag both of them together. So this is it. This is it. So this candle explanation here, this is it. This candle explanation here, this is it. So this one opened here, close here, created a high, created a low. This one opened, did not go up at all. It didn't even create any candle, but it came down, cleared this previous candle, and then go up. Now, the next candle might now be a bullish candle. So let's imagine the next candle is now a bullish print candle. You understand? And then it opened from here and then go up and then probably just create a little bit of wick or whatever. Then candlestick pattern trader will not tell you this is Black Crow or Three Soldiers or Morning Star or whatever. Look at this candle now. I think this is what they call hammer top. Ah, ah, oh God, man. I'm no shades, guys. This is how I teach, okay? But I mean, if you have, I'm sorry if that is what you're currently learning, and I'm not trying to shade you, but please go and throw away those things. Eh? I just showed you what happens in the. It happens. It's what happens in every single time, and this is how we predict price. But hey God, I'm having hiccup, guys. I think I have to close this class very soon. I'm having hiccup. I don't know what's wrong. Now, mind you, what I've shown you, this thing I've shown to you, is a reversal. It, it's a reversal price action thing. That's what I've shown to you. Price open, clear this level, and then reverse. Price open, clear the previous day high, and reverse. That's what I've shown you. It's just reversal. Now, what of continuation? When we get to continuation, we'll talk about it. But this is basically what happens in a day, in every single candle. This is how it delivers. Now, there are there are numerous ways actually that we can use to predict price in MBM, but I'm going to release just three for you guys. The first one is what I've shown to you, previous day levels. Previous day levels. The second one is the whole price level. Whole price level is a dealing range level, dealing range rather. Okay. And then the third one, when we get there, we'll talk about it. Now, let's trash the whole previous day level. Now, I'm sorry, not previous day, rather previous candle level. Sorry, that not previous day. The reason why I've been using previous day is because I that's basically what there are reasons for that. Okay, we as an MBM trader, especially somebody who's just starting, it's very important that you pay attention to the daily candle. And I have my reasons which I'll share to you. But it works for every candle on the daily, weekly, monthly, wherever. Now that means that your question is now that chat with Max. Are you not telling us that let's imagine this is a weekly candle, this is a weekly candle, and price not clear week the previous week low? We can start looking for buy. Yes. Yes. But like I said, it's not as simple as that. There are other things we need. There are other things we need. Remember, guys, I talked about the when I was teaching you guys based on mode of operation of the market, I told us that days of the week have their own characteristics. Monday is the beginning of the week, right? And I said Tuesday would follow Monday, right? Most probably follow Monday. Then Wednesday would be the reversal. And if that reversal does not happen on Wednesday, what happened? It will happen on Thursday. Now let's imagine that this clearing of the low of this week happened on Monday. Would you be looking for buy? No. Why? Because it doesn't make sense. It doesn't make sense. I hope you see why I'm saying context. But on Friday, price can still clear the low of the week, and then you will start buying. Now, based on pattern, did it clear low of the week? Yes. Monday cleared low of the week, you did not buy. It was Thursday that cleared the low of the week that you now buy. Why? Context, very important. Logic, very important. The same thing happened. Clearing of the previous week low, but different context for price. That's why I keep on screaming, MBM traders, don't trade patterns. There are things we use. We are smart people. We don't just jump in like fools. Oh, it has created this particular pattern or whatever, and because of that, you start buying. No, there are other things attached. Okay. So as I was saying here, regardless the time frame, it could be daily, it could be weekly, it could be monthly, it could be hourly, it could be seconds time frame, it could be minute, anyone. It happens on all time frame, guys. And I'm going to show it to you. Now, there are some times where it does not happen this way. But you see this one I have shown to you. Let's go over to the chart and let me show it to you. Okay. Now, I'll still show you other ones. Like, I'll show you other ones. Okay. Maybe in our next class, guys. I'm having hiccup now. I don't think I can continue this class, guys. And it's really affecting me. I want to round it up. Okay. So, but I promise tomorrow I'll definitely host the next class. Now, in our next class, I'll be talking about other things that, because now I've told you that it's not because of price just cleared previous day levels, it's not mean that you start buying or you start selling. There are other things you look out for. In fact, this whole class is just telling you about expectation, not really prediction. So we have a lot of things to still cover. Still have a lot of things to cover, but at least we are making progress and now we are speaking in technical terms. We are representing those fundamental understanding technically, and we are seeing meaning into them. So I'm going to, let's go to the chart. And I'm going to use, let's just use few body of candle. Yeah, I forgot to tell you now that when price clears previous day, previous candle low, and we anticipate reversals, what does that tell us? What would be formed from this low here to the close of the day? What do you think would be formed there? The wick. It will form a wick. It will form a wick. So from the close of the day to that low where it cleared previous day low, it will form a wick. And for the situation of a high, when price clear previous day high and start selling, and start reversing, from that reversal point price to the close of that candle, it will form a wick also. So this is how wicks are formed. So you don't need a fortune teller to start, or someone to start, narrating the story of the end of the world for you. We know how these things are formed. Let's get down to business. Let's look at recent price action. I'm on the daily time frame. I'm just going to reference this candle. Now, look at it. Let's start from, from here, this candle. And look at the next candle that followed, this particular candle that followed it. Let me zoom in. You see this? You see this candle? Look at the next candle that followed. It opened here, cleared the previous candle low, and then what happened? When it got to this price point here, it was okay, and it started reversing. Now, you see how it did not reverse immediately. After clearing that low, what happened? It went down a little bit. Went down a lot. Okay, it went down a lot before reversing and closing. Okay. So once price cleared previous candle low, then created the wick. Same thing happened here. Cleared previous candle, see the low there, See this low here? See this low here? Cleared it and then reversed. Created the wick for that candle. Cleared the candle low, created the wick. Look at this one too. Cleared the candle low, created the wick. Now, this one is a bullish candle. But the same scenario that happened here, that happened when a bearish candle, regardless of the fact that it was a bearish close candle, is the same thing that happened when it was a bullish close candle. You see how candles color don't matter. The reason why I'm still using colors is because of you guys are still coming up. It happens. Even in a bullish scenario, let me go and look for a bullish scenario. Like, look at this bullish candle. Look at the next candle was a bearish candle. See what happened? It cleared it and then eventually closed bearish. So you see two opposite candle, a bullish and a bearish. But the scenario, because of this thing is constant, it will always happen like that. Look at this one too. Two negative candles, bullish and bearish, opposite candles rather. But it's still the same thing that happened. Look at two similar candles. Clear the low, it's still the same thing that happened. Even two bullish candles. Let me go and look for it. Let me look for two bullish candles. Let me see. I hope we're able to get one that explain the scenario of two bullish candles. I'm looking for low. Price clearing the low and exactly. Look at it here. You see, even in these bullish scenarios, what happened? Price cleared the previous candle low. This candle was bullish. And then what happened? Next candle cleared it and still closed bullish. It's a constant thing. Once price cleared the previous candle low, then we can expect the wicks for that candle, for this next candle to be formed. Expect does not mean it will. There are other things we look at because it could clear this low and start and does not reverse at this point. The question is, Max, how do we know which price exactly is going to reverse? Relax, I'm going to show you. I'm going to teach you, okay? There's no point in explaining or whetting your appetite, and at the end of the day, I'm not teaching you all these things. Of course, you will learn all of them. So please, your job is just to pay attention. Now, the same thing for a bearish, the high of the candle being made. So when you see price clears a candle high, like in this scenario, see how you clear that high, and what happened? It's reversed. Look at this candle high, the next candle cleared it, went up a lot. You see how this candle here, after clearing this previous candle high, did not go much, but this one went much. How do you tell that? How can you know? With MBM, you can know. Trust me, you can know. You see, the reason why MBM has so much lecture is because of the preciseness. It takes a lot to be this good. That's what I'm trying to tell you. To be as good as what I am telling you is possible in MBM, it takes a lot from you. A lot. A lot of reading, a lot of studying, a lot of understanding. You think I sleep early? Even now that I'm profitable, yes, there are times when I am able to sleep early. But before I became profitable and I was crafting the market business model, I barely have 2 hours of sleep in a day. I barely. It took a lot from me. It's going to take the same thing from you. The only difference now is that what took me, let's say, about 4 years to achieve, now within the space of a year, you have everything. The knowledge is yours. You don't have to go through the same pain that I went through. All these things that within the space of 1 hour, I've been able to teach it to you. Do you know how many months it took me? If it were that easy, you would have known about them now. But you don't. I should tell you how important this information is. So all these things, because of the precisions, the preciseness that comes with trading the market business model, it requires a lot of knowledge, understanding, breaking down expansion, a lot of things, breaking, rearranging, helping you. The point is just understand this thing first. And you can tell with precision that you see this next candle that is forming is going to clear the high or it's going to clear the low. You can tell. It's not even a thing of game or joke. Yeah, there are sometimes when you will be wrong, maybe based on your context narration is, you did not narrate it right. But most of the time, you'll be right. So today is Friday, right? This is a new candle for Friday that's forming. If this Friday candle, this new candle that is forming, goes to clear this low, what will happen? We can anticipate the week of this Friday to be made. The week low of this Friday to be made. And if we clear that high, we can anticipate the week high of that Friday to be made. Simple. This present candle that is creating now, it's as simple as that. But when I tell you, it's not just like as simple as, just saying because I clear daily. Look at, for example, did this one not clear a high? But this move here is not enough for you to make money. You need a move that can make money, right? Exactly. That is where it becomes complex. If it's just price clearing previous candle high and reversing, of course, everybody will make money. But it's beyond that. Okay. So I hope this little lecture has helped you guys to understand, uh, um, you know, you know, the thing I just explained, I just explained in this video. I'm sorry, guys. I'm having serious hiccup. I don't know what's wrong with me right now. So in tomorrow's lecture, what I said I'm gonna teach us, and um, please make sure you practice all these things I've shown to you in front of your screen. Go and look for them and see how they play out. Okay. Have a wonderful night rest, guys. Bye bye.